Welcome back. You're watching Media Dialogues and I'm talking with Saugata Gupta of Marico. Saugata, let's talk a little bit about demand. And it's very clear that volume growth has been lagging and rural demand seems to be a problem. But given that inflation, we believe, has peaked, given that input costs have come down, do you see this getting dramatically affected in the next few quarters? Do you see it like a surge happen as a result? What is going to happen where rural demand and greater volume demand is concerned? And I'm of course associating greater volume demand with greater rural demand. It need not be.
So you're absolutely right. I think the peak as far as inflation is concerned is over. I think if you really look at Q1 experience the peak inflation, especially with respect to vegetable oil, I think that has come down. Crude is slowly coming down. And having said that, I think if you look at this quarter, obviously the softening has started. There were significant price increases that happened. And also what happened was significant amount of food inflation. Now what happens at the bottom of pyramid, as you go down the population strata, whenever there is high food inflation, consumers tend to titrate FMCG consumption. So there's either downgradation or a switch that happens to a cheaper brands. So I see that change slowly happening, and therefore there would be a significant, it will happen gradually, but you will see some changes as far as volume recovery is concerned from the next quarter onwards. And I'm sure a lot of players, we have also started the process, third quarter. And as you know, a lot of players, including us, have started providing the benefits back to the consumer in terms of value. Because if you look at any emerging markets,
have you dropped prices again? You've dropped prices.
Absolutely.
That's very nice to hear, because normally you don't see price hikes getting rolled back, do you, in the consumer goods space?
No, it does, because I'll tell you why. This time the price increases were unprecedented. At the same time also what happened was, if you really look at it, that led to some kind of a volume stagnation. And a lot of growth that happened in the last quarter was actually value-led growth. Now, I think as far as emerging market is concerned, it's very, very critical to protect volume growth and market share. And therefore, I think I would think that you will see a gradual increase as far as volume growth is concerned from Q3 onwards.
And the price drops that you just mentioned, or the rollbacks, that's had an unlocking impact?
I've definitely seen in Saffola, because see, as you know that Saffola is a very metro distributed brand, so therefore you can see the impact far more quicker. A brand like Parachute, which is very well distributed, by the time the price drop happens, especially in rural, it takes significant number of weeks. So we are seeing that Saffola, as you know, Saffola last quarter didn't do well because of the huge inflation. We have seen that improvement happening moment we took significant drops in prices sometime in August.
The digital first brands, do you see them ever becoming as widespread, as well known and as iconic as the brands that we've grown up before digital came into our lives?
So if you look at even traditional FMCG brands, the success rate could be 3 on 10. In digital, maybe it will be 1 on 25, which will be scaling up to that levels. I think once you hit a certain scale, I think it's important that these brands, and we're already seeing some of the digital brands transcending into brick and mortar in terms of getting into either modern trade or premium go-to-market and traditional trade. And therefore, it will happen to some of the brands. Having said that, I think it's important that for any journey, what gets you here will not get you to the next level. So I think the capabilities that are required, I think then in terms of traditional distribution, mass marketing will start kicking in. So therefore, I think the 0 to 100 crores or the 200 crores through digital is very much possible. But beyond that, you have to move. And that is why I think where strategic partners like us come in, which will help these brands actually to do that scaling up.
Let's talk a little bit about the international markets. I think Marico, your brands are available in about 25 countries across Africa and Asia, and they're contributing pretty significantly to your revenues today. So give me a sense of how these brands are doing in these markets.
It's actually 3 big segments. We are present in the rest of South Asia, with Bangladesh being the largest market. We are present in some parts of Southeast Asia, which is Vietnam, Malaysia, Myanmar. When we are present in Middle East and Africa. Africa, again, our presence is limited to North Africa and South Africa, and we are now expanding in certain markets. I believe we have a very strong, successful model in Bangladesh, and we are now replicating it in Vietnam and Middle East. I think if you look at it, our model is local instead of global. We have clearly hair nourishment as a big driver in some of the markets like Middle East, and also male grooming. The Bangladesh market is like the India market. Having said that, I think we are far stronger in terms of distribution and brands, and therefore we have been able to expand into new categories like shampoos, baby, and these categories which have been successful diversification. If you look at any international market, I think we strongly believe you have to get 4 things right. You need to have the right portfolio, you need to have the right go-to market, you need to have the right cost structure, and you need to have the right people and processes. And wherever you have to replicate that. So therefore, the Bangladesh success, we are now planning, we are replicating in Southeast Asia and also in Middle East. The international business is now very profitable. We have a 20 to 25% operating margin. In 2014, it had a single-digit 9% operating margin. We have invested organically, and one of the other interesting things we have done compared to a lot of other companies, that we have grown far more organically in the last 6-7 years rather than inorganically. And we are pretty confident, in spite of the fact that obviously there are headwinds in certain markets because of inflation, because of currency devaluation, that over the medium term, I think we have a business model in place which can deliver continuous double-digit constant currency growth.
Is it exciting to see Indian brands or brands that have originated in India and all these far-flung places of the world?
Absolutely, as long as I think there's a focused approach.
Sure.
I think a lot of times when the people expand, they use the spray and pray kind of a model. I think it needs a focused approach. It needs a kind of a discipline. I think we used to run a lot of these markets with Indian expats. I think localization of talent, ability to attract local talent, and therefore
has made a difference.
Has made a significant difference because the skin in the game is far higher when you work with local leadership. And that's a significant change we have done. The second thing is, of course, taking risks. For example, if you really look at some of the categories we operate in international markets, are very, very competitive categories. We don't operate in India. Shampoo is a big category in some of our international markets. So ability to, face that competitive intensity, and also I think we have generated a significant amount of resources to fund that investment there. And that's the reason I always believe that while you repair the plane, you have to fly. You can't say, I'll first repair and fly. We have been able to do that quite successfully in international markets. And I think we have one of the best international businesses which is consistent and continues to grow profitably, grow amongst a lot of the peer companies.
When you look at India and you hear statements like Reliance Industries made at its AGM saying this year we will launch our FMCG goods business, how do you react?
See, I think this market is very big, and I have a very strong belief in the India story. The headroom for growth in India is tremendous. I think for every company to succeed, existing companies, they have to continuously innovate, and it is important that it has to continue to deliver consumer delight at the lowest possible cost. So if you look at COVID also, or if you look at any such disruption that has happened in the world, always the strong get stronger and the weak gets weaker.
So how do you react to a big company which is already well entrenched in distribution and on the retail front come into the market of the FMCG sector?
So I think obviously, the competitive intensity
how do
will
you react
go up.
to it? Like what is the one thing you're looking for or looking out for or looking at?
No, I think, as I said, that I think obviously this market is big for a lot of players to enter, and it is very important that for any company to continuously succeed has to ensure that it for any FMCG company to manage cost structures so that it delivers value to the consumer, continues to expand distribution, continues to innovate. And as I said, the market is big enough for a lot of players to succeed.
Okay. Saugata, thank you very much for having this conversation. I wish you and the team at Marico a lot of good luck.
Thank you.
And festive season greetings.
Thank you.
Greetings of Durga Puja and Navratri, and all now cascading down to a lot of other festivals, isn't it? Thank you.
Thank you so much.
Thank you very much for watching. Catch Media Dialogues again if you want to look at business through the top line lens and if you're looking for insights. See you soon.